Here first on Fox Business, the potential for loss of life is heartbreaking here, and that, of course, is first and foremost. Can you, with your trained eye and expertise, at least tell us what you think happened from what you have seen?
Well, I think it's not unheard of for a ship to lose power. It's not something that happens often, but it's something that from time to time you can see that. And seeing the scenes here is a combination of loss of power, well, called a blackout, and a loss of steering. So I think it could be either or a combination of the two. The unfortunate thing is obviously it happened right at the wrong time, right before they have to go under the bridge, and that caused the collision.
Obviously, again, as we say, the human toll is very upsetting if indeed we start to hear of some bad outcomes here. But let's get to the implications for the economy and for what the consumer out there will see. This, as I understand it, is a much more busy port for consumer goods and autos versus softer goods or commodities, correct?
Yes, that is correct. I mean, obviously you have major ports in the East Coast, like New Jersey, New York being the biggest one, but then you go down and Baltimore, and then all the way to Savannah and Charleston. These are big ports for container ships, and as well as cars. So I think the initial impact on containers and cars will be that these imports have to be distributed to the other ports, find a way on the way to New York or down to the south. So I think from that particular angle is not going to be a major impact as it relates to cars and consumer goods.
Except that you've got to figure that there are individual car companies that might be hit harder than others. Which ones?
So I think, as you said, Ford is one, and I think it has to do more with actual parts, auto parts. So you might see some delays in terms of distributing auto parts to around the country, especially on the East Coast. But I think all this is part of the logistical chain and can easily be managed. And each company has to manage their own logistical chain, of course.
Let's keep in mind, we don't want to diminish the point about commodities. Coal is huge for this particular port, yes. LNG, sugar, what else?
Aluminum. I mean, there are warehouses there that warehouse aluminum. So again, it's not a major commodity. Most people wouldn't even feel the impact of that. But I think the coal issue, about 25 to 30% of coal exports go out of Baltimore. So for the coal producers, and I think there are a few companies out there that have seen significant declines today in the stock price because of that. And I think that tells something about the duration, what people expect this to last longer than a few weeks.
Okay, longer than a few weeks. Today it is March 26th.
Yes.
When will the port of Baltimore reopen?
Again, it's totally a speculation, but I don't think it's going to be weeks. It could be months.
Months?
Yes.
Maybe even the end of the year?
Well, I mean, again, it's something that you have to clear all the salvage there. You have to move out the big ship, right? And forget about rebuilding the bridge, which could take years and billions of dollars. But about opening the port, obviously, I think it's going to be months, maybe sometime in the fall.
Let me just add that President Biden has already spoken and said that he expects and fully hopes that the federal government is going to spend the money to rebuild every part of that bridge. You talk about the supply chain and the interruptions it has seen, not just with COVID, but lately with the Red Sea, the Suez Canal, the fighting in the Middle East. We have drought in the Panama Canal, the fighting in Ukraine, with the Russians attacking Ukraine. Will we see inflation move in the direction it's not supposed to, and that means higher? Prices will continue to go higher because we add yet another snafu to the situation.
So when you talk about shipping, there are two things that impact shipping. First of all, fuel, which is oil prices. And you've seen oil prices slowly moving higher. That has to do with the geopolitics, but also a very strong economy. So fuel is going higher, and that impacts the cost of freight. The second is what you discussed, like all the disruptions because of the Suez Canal, the Red Sea, the Panama Canal because of drought. That's weather related. And then, you have the Baltimore, maybe marginal, but around the world, from time to time, you have these issues that more and more affect shipping. And I think people should pay more attention to what's happening because, yes, inflation is what shipping can drive inflation higher. Yeah. Is important.
Well, we saw how expensive it got during the lockdowns and the pandemic. You have two funds, Be Dry and Be Wet. These are ETFs, but they're more futures, correct? And they haven't, as what I've seen, done well. It doesn't appear, unless I'm missing something that, you can really, that there's a positive way of, I know it sounds horrible at this point as we still wait for 6 souls to be found, but profit off this or invest in it for our business audience.
So both of these funds are trading vehicles, and actually BDRI is up something like 200% in the last 6 months.
Okay, well,
because of
my bad.
it has to do with what you discussed before, the Red Sea situation.
Oh,
right?
it's Be Wet that hasn't.
Big Wet hasn't. I mean,
Okay.
it's up marginally. But I think all these that reflect the price of freight is important to follow, because it gives you an idea about inflation. Mm-hmm. It gives you an idea about growth as well, because if China suddenly starts to grow fast and want to absorb more commodities, the price of freight will increase, and that will affect these funds.
John, I wish it were under better circumstances that you were here, but thank you very much for your expertise.
Thank you very much for having me.
Any new developments in this story, be assured we are going to bring them to you. In the meantime, the 48%